we've discovered digital gold.
Yeah.
And there's a lot of people trying to sell people digital tinfoil because it can, you know,
fool's gold.
The distraction from Bitcoin is probably the thing that holds back people really understanding that this is not a get rich quick scheme. This is a don't get poor slowly scheme.
I'm Nitin Sharma. You're watching RecTalk, and I've got some recommendations for you. My first recommendation for you is Asen. Asen are a modern employer record built specifically for contractor recruitment businesses. Asen helps teams scale fast and stay compliant across the US, Canada, and globally with an all-in-one white label EOR platform. From onboarding and payroll to workers' comp and benefits, Asen handles the entire back office so you can focus on your clients and the talent. To learn more about them, check the link in the description below. My next recommendation is Think in Circles. Job ads are not marketing. AI won't save a bad strategy. Most recruitment agencies and RecTech businesses are failing because they lack activity. They're failing because their marketing's got no clarity, no positioning, and no consistency. That's where Think in Circles comes in. They were built specifically to solve that problem. They understand that recruitment market inside and out, how agencies actually win clients, how candidates make their decisions, and how RecTech businesses actually scale. So for recruitment agencies, Think in Circles are your fractional marketing team, fixing positioning, sharpening your messaging, and driving consistent execution, but without the cost of a full in-house team. For RecTech suppliers, they solve the hardest growth challenges: go-to-market strategy, demand generation, and land and expand growth in the UK and beyond. So no generic B2B fluff, no random tactics, just recruitment-focused marketing that helps you understand your problem and then provides you a solution on how to fix it. Find them at thinkincircles.com, link in the description below. The recruitment market moves fast. Growth targets are changing, costs are rising, and hiring locally isn't getting any cheaper. In 2025, 30 recruitment agencies stopped overpaying for talent and started scaling smarter using Infinity Staff Global. By outsourcing key roles to South Africa, agencies embedded fully trained recruiters, resources, BD professionals directly into their teams, working UK hours, using your CRM, and delivering real results. You reduce payroll costs, you cut HR and admin burden, you gain access to a deep pool of experienced recruitment personnel and talent, all at a fraction of UK costs. Scale up when demand rises and stay lean when it doesn't. If you're ready to grow without the pressure, discover how at infinitystaffglobal.com, link in the description. I never understood why recruitment businesses that are growing choose to hire a single marketing person who can't do it all, instead of using an outsourced team that can. Also, by contrast, I never really understood why businesses that have got an in-house marketer keep adding headcount rather than strategically outsourcing specialist skills that they need in the team. That's where the marketing junction comes in. They give businesses access to the right marketing expertise at the right time without the overheads of a growing internal team. They specialize in recruitment marketing, which means that they understand how you need to generate new leads, tap into niche and that hard to reach talent pool, and build marketing strategies that support both clients and candidates. The result? A lower marketing spend, smarter execution, and a significantly higher return on investment. And if you want proof, the Marketing Junction's hiring savings calculator lets you see for yourself exactly how much you could save by outsourcing strategically instead of hiring again. Link in the description. Are you still wrestling with spreadsheets to calculate your team's commissions every month? Then this next recommendation is for you. Let's be honest, month end can be a total dread for finance teams and a source of sort of guesswork for consultants, right? That's where I highly recommend Conquest. They're a global leader in commission software built specifically for the staffing and recruitment industry. Instead of manual data exports, Conquest plugs directly into your existing CRM or pay and bill system, like Bullhorn, Vincere, JobAdder, you know the lot. And it automates everything from splits down to currency conversions to complex team overrides and clawbacks. But it isn't just about the back office. Conquest brings your commission plans to life with real-time visual dashboards. Consultants get visibility into their earnings pipeline, which doesn't just reduce their inquiries and queries, but actually supercharges and motivates the team too. When your team can see exactly what they're earning at the moment the deal is tracked in the CRM, productivity goes through the roof. The result? Zero error rates, cleaner CRM data, and a massive reduction in the admin burden that comes with calculating these commissions. So say goodbye to spreadsheet headache and get your commission strategy into the 21st century. You can even start with the free health check tool. See how your current setup scores. Details are in the description below. Welcome back to another episode of Founder Diaries, a RecTalk podcast. This one's going to be an interesting one for those of you sat there trying to understand how to do things a little bit differently. So, most recruitment businesses historically have always measured their success with number of placements, revenue that they generate, their turnover, perhaps their headcount. Not my guest today. My guest today has built a profitable recruitment business in an exec search capacity. And then rather than kind of reinvesting purely into headcount and growth, he decided that actually there's a different reserve asset that he wants to go and invest in, and that's Bitcoin. Now, some of you are probably thinking, is that a smart treasury management decision for a modern business? And some of you think, is that a level of risk that you would take on? And why would you take that on? Let's dig into it and find out. My guest today is Scott Ellam. He is the founder and CEO of XCE, Connecting Excellence, and the managing director of their flagship brand, Spencer Riley. A lot of you will know him already. Those of you who don't, Scott, welcome to the show, and thank you very much for giving me your time.
Hi, Nitin. Good to be here.
Can you give us a bit of background as to kind of your, I suppose, your experience so far in this crazy world of recruitment? And then I'm going to hit you with the very first hard-hitting question that I've got for you, because this one's going to be a bit of a head-scratcher for a lot of people, I think. Yeah,
of course. So my experience in recruitment so far, so like a lot of people, I came into recruitment straight after university, and I was looking for, I suppose, what appealed to me, because I had the options of graduate scheme or executive search, and I'd kind of worked out prior to coming into the industry that I wanted to be in permanent placement, a high fee level, the opportunity to develop, pick my own market, be a 360-degree recruitment consultant, and get strong training. So I went into that kind of environment, and then I've been in that kind of environment since. In my first year, I was one of the highest billing consultants within quite an established, decent-sized exec recruitment firm. And at the end of that first year, I had quite a bit of a story from a client who was very keen to get me on board in their business, and I'd worked with them for probably quite a short period of time, like 3 months, from the typical, we're talking 2012 here, cold call, headhunt everybody in their industry for them. First time their industry, and that client has really seen somebody actually actively and confidentially headhunting on a company's behalf. So I had a lot of success with one client, and that made up probably 20% of my billings. It wasn't like a high revenue generating lead, but it was somebody who was very invested in me. And they offered me a role. There was a bit of a story behind it. They were looking to acquire a company. They couldn't get hold of the owner of that business. Nobody in their business could, and they called me at lunch and said, everybody's trying to get hold of this guy. His business has gone into liquidation today. We want to acquire the business, but I need to speak to him fast. And I think he was quite impressed with, a lot of exec recruitment consultants will know this. When you need to get somebody on the phone, I found out the guy had a villa in Portugal, get on the phone to his wife who's renting the villa out, get on the phone to the owner, and we acquired the business. And he kind of took me on holiday at the time and took me out on his yacht with his wife and his kids and all this kind of stuff. Said, here, this is the offer I'm making you. It was first page basic salary, second page commission, third page purpose, which was headhunting and acquiring businesses. And then fourth page, it was like a picture of his plane. And it was like, if you accept the role, I'll send you, 23 years old, off to do your pilot's license, and then you can come back and start work. So I said, yeah, but there just wasn't enough to do. So I ended up, after about 9 to 12 months, coming up with a way that I could set a business up myself, be supported somewhat by the basic salary I had and the company car I had and all of that, and do it with some guide rails, in that I there was very little downside risk for me, and I was just going to send half the revenue to my current boss at the time if it was successful, and we built from there. And then since then, 2014 to today, it's been growing, like you say, what you would deem quite a popular executive international model that's morphed over the years, and now we do 70% of our revenue from overseas and working in high growth sectors, and we've got a strong team. But I think that's probably a summary of where my start came from, and a little bit about the journey.
I like that. I love that. And look, the truth is, you've built a reputable business that is well known, is profitable, everybody kind of gets what you do. You know, you didn't go after the kind of the vanity metrics of, oh, okay, you know, let me grow it out to 50 heads, 100 heads, and let me go down that route. But you did do something that's a little bit kind of unique, right? Dare I say, I don't think there's anybody else that even went down the road that you went down, and that. So I'm trying to get my head around sort of, at what point do you look at this and go, do you know what? Yeah, I kind of see how business works, how the financials work, and I'm going to look at this balance sheet strategy in a different way, right? I'm not going to chase the vanity metrics. I'm not going to, you know, very, very few businesses will ever IPO and go public. At what point did that kind of start rearing its kind of, you know, the idea start churning in your head, and then from where how do you go from that to then go in Bitcoin? That might be the asset class I want to kind of go after.
Yeah. Well, we IPO'd December the 11th, and we set out to raise a minimum of 1.5 million, which is kind of like in line with scale of the business. And we were several times oversubscribed, and we capped the raise at 3.3 million.
Mm-hmm.
We used 2.7 million of the cash that was raised at IPO to purchase Bitcoin over the weeks that followed. And then we released a convertible bond, and I think the world's first truly Bitcoin denominated convertible bond. So we've got basically the balance sheet side of the business, which is focused on the Bitcoin strategy. And then we've got the operating side of the business, which will grow as a direct result and is designed to grow as a result of the balance sheet strategy. So it's not a new idea. We started building a Bitcoin balance sheet and having that as our primary sole reserve asset in 2021.
Why?
So, I mean, if we take that back to when I set the business up in 2014, I'm setting the business up, and this will probably resonate with other recruitment company owners, but when you're setting up the business to last forever.
Yeah.
And people are always saying to people when they're setting businesses up, what's your exit strategy? What's your exit strategy? And there was no exit strategy. It was a forever kind of strategy of this is my career. This is where I'm going to build this business. I'm going to keep building this business. And I think the reason I made the decision in 2021 is kind of to solve that problem that a lot of permanent placement executive recruitment companies have, which is, how do you lock in and store value over 5, 10, 15, 20 years and build a resilient balance sheet that's got a significant amount of assets on it that are appreciating?
Very few people are going to buy a perm heavy business, right? That hasn't got a huge amount of residual or retained income coming through. You know, the process, the team, the brand, the database. Yes, there's multiples attached to that, but actually, it's as good as the leader in charge. And actually, you know, it's more about, well, if you walk away, then is this going to continue operating the way that it is?
Yeah, it's a people-driven revenue model, isn't it? And the forever point that I touch on there also applies to what's the exit strategy for a lot of permanent placement executive recruitment companies? Because if you're speaking to a competitor about acquiring their company, then they risk losing their biggest billers to you before an acquisition completes, which devalues their company and loses them revenue. And you see very few competitors acquiring each other in the marketplace. And you see private equity firms come in, and they tend to only buy one executive permanent placement recruitment firm, because after buying one and making some changes that they feel based on maths and on the paper would make sense to them and help increase profitability and increase growth, don't translate to that when you're delivering it to the people inside that business, and the revenue can walk out the door. So you see few acquisitions of competitors, you see very little consolidation, and you see very little private equity acquisitions that go successfully over the long term for the PE firm and for the owner. So it kind of, without trying to at the time, has helped us develop a strategy where we can provide a solution to businesses in our industry that will allow business leaders in their 20s, 30s, 40s, 50s, wherever they are, whatever stage in the business cycle they are for themselves, plan a long-term exit over 3, 5, 7 years that's equity linked to a PLC that's got a strong balance sheet and is experiencing compounding growth from both the operations and the balance sheet. Now, the way I've said that's probably doesn't make the thesis of why would I start buying it in 2021 clear.
I guess the question I'm trying to understand is why Bitcoin, right? Because, like, again, you could have gone after gold, you could have gone after the, you know, a S&P 500 linked investment. You know, I get it. You got cash in the business, and you're sitting there going, well, it's just sat there, and it's going to be eroding against time and against inflation. I don't want to invest it in more staff. We don't want to, you know, some would say, you know, and I know business owners that have done this where they've then gone and bought an office space or, you know, using that cash, or they've bought, you know, properties, or they've bought, you know, I don't know any that I can name off the top of my head that would have gone, actually, yeah, let me put it in the stock market, let alone then go, actually, no, forget the stock market. I'm going crypto.
Well, you're naming all the other options that are available. I'll start by defining the difference between, because you use the term crypto there. Our board of Bitcoin maximalists who are ex-Goldman Sachs, some are, one of our board advisors runs the largest hedge fund launch in Switzerland over the last decade, which holds 5,000 of the Bitcoin you speak about, but we are not crypto. So if I start there to give a brief explanation of that, if you look at the history of money and the history of cash, most empires tend to fall when the leadership starts debasing the currency. And what you mean by debasing the currency is the Roman Empire sticking some copper in it and shaving off some gold off the edges till the point where the army decide they don't want to work for them. And if you look at modern monetary history, there's a few standout moments, but in 1944, Bretton Woods, the gold standard, or the gold exchange standard, was set, and that was $35 buys 1 ounce of gold. And that held until 1971, when countries started asking the US for their gold back. I think it was France who sent a ship over to say, we actually want to custody our own gold and keep it in our own safe in France from now on. And we had the Vietnam War going, and there was the Nixon shock in 1971, where Richard Nixon temporarily removed the link between gold and the US dollar. And that led to the ability for central banks and private banks to be able to increase the money supply without any real true cost from energy or needing to buy more gold to increase the money supply. And since that moment in 1971, you've just seen huge amounts of increases in government debt, significant amounts of money printing, which they will term quantitative easing. And every time more money is created, it dilutes the money that you're earning or that you're saving. So if you look at the British pound over the last 50 years, it's fell by 95% in purchasing power. And if you look at the last 5 years, if you look at the timing of when we started putting Bitcoin on the balance sheet in 2021, in 2020, there was a huge economic shock. Now, I'd been a Bitcoiner myself from 2016. I've discovered it. And in my personal life, I'm studying, okay, this is the first time in human history we've had an asset that's mathematically scarce. There will only ever be 21 million, and you can verify it. And it's the first time we've got an asset where it can't be confiscated, and you can move it from Britain to whatever country in the world you want to move it to without having to. You mentioned a few things there that the other options. Gold's hard to carry through an airport. So if somebody's wanting to leave the Ukraine a few years ago and they want to take all their wealth with them, then they can take Bitcoin with them, but they can't take the property they own and they can't take the gold that they own. It's very difficult to do that. So I'm learning about the asset over them 4 years, and then we get to 2020, and every government, president, prime minister around the world effectively said, in order to delay an economic shock of the magnitude of, say, the Lehman Brothers style collapse in 2008, we are going to actively print money and increase the money supply and pay you to stay at home and not produce anything. Which immediately for me said, okay, we are in for high inflation over the next decade, the next 2 decades. That inflation is coming and it's here to stay. And they've just sort of opened Pandora's box and said, if there's ever a really bad economic environment, again, we won't let people lose their jobs. We won't let people lose their homes. We won't let businesses go under. We will just increase the money supply until we've mitigated it somewhat. So by doing that, over the last 5 years, I think the British pound's lost 22% of its purchasing power. So running a business from 2014 to 2020, like a lot of business owners, I'm building a cash reserve and I'm watching every year it go down in purchasing power, which what feels like between 8 and 10% a year.
Yeah.
So most business owners look at how do I invest, and you typically find that they will buy property. I think that's probably the most popular one, especially in recruitment, because we are cash flowing businesses, quite often profitable cash flowing businesses that don't hold any assets.
Yeah.
So how do you start building a balance sheet of assets? Well, if I was to buy a building, then if the building isn't fully rented out, I'm going to be paying business rates. I'm going to be paying increased tax. I'm going to have to pay insurance on the building. I'm not going to go to extreme, but the building might start leaking. The lift might break. Yeah. You've got all these risks attached to it. And then if your business needs 50 grand or 100 grand cash injection that month, you can't just borrow against the building, or you can't just sell 10% of the building that week and use it for the business. So the disadvantages of owning property are becoming more and more apparent over recent years as well. Gold, I mean, it's hard enough to buy it and know that you've bought real gold, and I don't fancy putting the staff under the stress of having a safe in the office that's full of gold.
Gold bars,
So it's difficult, and it's difficult when you've seen gold spiking up recently and silver, and you speak to people and you say, "I've sold my silver." Now, how do you do that? Well, a van turned up at the house, a security call van, and they've took pictures of it and they're taking it away to check it. There's all these difficulties.
Yeah.
And you mentioned investing in shares. Well, by investing in shares, I've got to study the market, I've got to understand the company, I've got to understand the CEO, and then I've got to hope that there's nothing goes wrong with that business that I'm not in every day, that I'm not in control of, and that the market dictates the value of. So you get an additional risk by doing that in your own business. So as a balance sheet asset, because I was comfortable with the asset of those years, and it has been the best performing asset over the last 15 years, I think it's averaged at about 60% compound annual growth rate. And I'm looking at a long-term strategy. So I thought, okay, for the next 4 years, we'll allocate all of our cash reserves and our surplus cash to Bitcoin, and then I'll start developing a strategy around that. So we started buying in 2021, and you might remember the price was quite high. It was like at 51 or something. And we started buying, and then it drew all the way down to 16.
Yes.
And then it drew all the way back up. We were buying throughout that entire period because we were using money that we wanted to hold for the long term. So by the time Bitcoin got from 51 down to 16 and back up to about 33, we were up 20%.
Yeah.
Because we'd bought and dollar cost average by buying weekly.
Yeah. My first recommendation for you is Asen. Asen are a modern employer record built specifically for contractor recruitment businesses. Asen helps teams scale fast and stay compliant across the US, Canada, and globally with an all-in-one white label EOR platform. From onboarding and payroll to workers' comp and benefits, Asen handles the entire back office so you can focus on your clients and the talent. To learn more about them, check the link in the description below. My next recommendation is Think in Circles. Job ads are not marketing. AI won't save a bad strategy. Most recruitment agencies and RecTech businesses are failing because they lack activity. They're failing because their marketing's got no clarity, no positioning, and no consistency. That's where Think in Circles comes in. They were built specifically to solve that problem. They understand the recruitment market inside and out, how agencies actually win clients, how candidates make their decisions, and how RecTech businesses actually scale. So for recruitment agencies, Think in Circles are your fractional marketing team, fixing positioning, sharpening your messaging, and driving consistent execution, but without the cost of a full in-house team. For RecTech suppliers, they solve the hardest growth challenges: go-to-market strategy, demand generation, and land and expand growth in the UK and beyond. So no generic B2B fluff, no random tactics, just recruitment-focused marketing that helps you understand your problem and then provides you a solution on how to fix it. Find them at thinkingcircles.com, link in the description below. The recruitment market moves fast. Growth targets are changing, costs are rising, and hiring locally isn't getting any cheaper. In 2025, 30 recruitment agencies stopped overpaying for talent and started scaling smarter using Infinity Staff Global. By outsourcing key roles to South Africa, agencies embedded fully trained recruiters, resources, BD professionals directly into their teams, working UK hours, using your CRM, and delivering real results. You reduce payroll costs, you cut HR and admin burden, you gain access to a deep pool of experienced recruitment personnel and talent, all at a fraction of UK costs. Scale up when demand rises and stay lean when it doesn't. If you're ready to grow without the pressure, discover how at infinitystaffglobal.com, link in the description. I never understood why recruitment businesses that are growing choose to hire a single marketing person who can't do it all, instead of using an outsourced team that can. Also, by contrast, I never really understood why businesses that have got an in-house marketer keep adding headcount rather than strategically outsourcing specialist skills that they need in the team. That's where the marketing junction comes in. They give businesses access to the right marketing expertise at the right time without the overheads of a growing internal team. They specialize in recruitment marketing, which means that they understand how you need to generate new leads, tap into niche and that hard-to-reach talent pool, and build marketing strategies that support both clients and candidates. The result? A lower marketing spend, smarter execution, and a significantly higher return on investment. And if you want proof, the Marketing Junction's hiring savings calculator lets you see for yourself exactly how much you could save by outsourcing strategically instead of hiring again. Link in the description. Are you still wrestling with spreadsheets to calculate your team's commissions every month? Then this next recommendation's for you. Let's be honest, month end can be a total dread for finance teams and a source of sort of guesswork for consultants, right? That's where I highly recommend Conquest. They're a global leader in commission software built specifically for the staffing and recruitment industry. Instead of manual data exports, Conquest plugs directly into your existing CRM or pay and bill system, like Bullhorn, Vincere, JobAdder, you know the lot. And it automates everything from splits down to currency conversions to complex team overrides and clawbacks. But it isn't just about the back office. Conquest brings your commission plans to life with real-time visual dashboards. Consultants get visibility into their earnings pipeline, which doesn't just reduce their inquiries and queries, but actually supercharges and motivates the team too. When your team can see exactly what they're earning at the moment the deal is tracked in the CRM, productivity goes through the roof. The result? Zero error rates, cleaner CRM data, and a massive reduction in the admin burden that comes with calculating these commissions. So say goodbye to spreadsheet headache and get your commission strategy into the 21st century. You can even start with the free health check tool, see how your current setup scores. Details are in the description below.
Yeah, so when we got to the IPO in December, I think we were 120% up on the Bitcoin that we'd bought over that 4-year period. But how do you use it in the business? I'd thought about going public a couple of years ago, but there was a risk of the staff from a point of view of if we failed to go public or if the regulators stopped us and putting everybody's salaries and mortgages in kind of a, okay, we're going for something here and we're not certain you can do it. But I watched and helped somewhat another business go public, but within 9 months of listed on the London Stock Exchange and gone from a small website company to a way over £100 million valuation by running this model and this model alone. Now, the difference is if they've had that success, they're first to do it, they've took the risk of being the first to do that in the UK. We want to be the first traditional business to grow as a direct result of the Bitcoin on the balance sheet. So I made the decision to go public because it's the best way we can power the business into the future for the staff. The best way that we can demonstrate to the marketplace of this model's success, and it allows us to solve problems in our industry, which is A, talent attraction. As a public business with a strong balance sheet, zero debt, we can now offer performance-based share incentives to attract high revenue generating talent, and they're then linked to the operational growth, the capital markets access we have as a public business with a Bitcoin strategy, and also the compound annual growth rate of the asset class, which we would expect to be 30% over the next 10 years. And also solve the issue for business owners in our industry, like myself at the time, where you're trying to lock in value and we can say, well, if you'd like to join the group, we can do long dated equity earnouts for business owners in the industry who've got zero debt, healthy cash balance, and a profitable business. And join the group, keep the same ethos, keep the same brand. We can share resources where we need to share resources, but we can provide you a 3, 5, 7, even 10-year plan that allows you to know that all the value that you're delivering in the company right now is being locked in for the future, and you've got access to liquidity at the time where you've set your business up to succeed while you're not there.
Yeah.
So we wanted to solve a few different problems, and that means that we've had to develop a board who can execute on the balance sheet side of a business and then develop the strategy to grow the operational side of a business. But it's been a 4-year journey of conviction in the balance sheet asset, followed by investors and board members coming into a business who are confident because of the 4-year history of a private business buying the asset through an 80% drawdown and keep continuing to do so.
Yeah. So where's the risk in this? Are you not concerned about the risk in this? And it obviously for you, like the kind of the reward outweighs the risk. But talk to me about that kind of mentality around kind of risk profile. Do you have to be a risk, no, not a risk adverse, but do you have to be somebody who's happy to take a risk to get involved in something like this? Do you think?
I think,
or in your mind, is it more of an educated? It's more of an educated risk?
In my opinion,
risk, right?
Yeah, in my opinion, the risk isn't owning Bitcoin on your balance sheet. The risk is not understanding Bitcoin and owning Bitcoin on your balance sheet. So, if what I'm saying is, if you're holding pounds on the balance sheet for the next 5 to 10 years, you're pretty much guaranteed that in the next 5 to 10 years, those pounds are going to be worth significantly less than they're worth today.
Yeah.
And if you're
not least because of the current economic climate.
Yeah, the current economic climate, unless you can guarantee to me that they're not going to increase the pounds in circulation over the next 5 to 10 years, they're going to be worth less.
Every historic once in a lifetime event that we've lived through so far this last 20 years has shown us that that's just not the case. They will, when required to, just plunge the country into more debt.
Yeah, when there's any kind of serious problem, the answer for governments is usually print more money to solve it. Yeah. And with that, I suppose, with that in mind, if you're holding it for the long term, you're being punished in some respects. That's right. And yet the value's being eroded and stolen from you. So when you look at Bitcoin,
by contrast, you're right. Because actually, so you're doing all the right things and accumulating this money, and not like frivolously spending it or wasting it or whatever, and then the value of that or the purchasing power of that is reducing. But then by contrast, you've got other people who are lumbered with debt upon debt upon debt, but actually the value of that debt is decreasing because the buying power of the pound is dropping. So you're kind of being punished for doing what on paper is the right thing. Having
exactly
having a bit of kind of financial stability in your own kind of business.
You can do everything sensibly and you can save cash, and you are punished. Yeah. So, if you look at show me the incentive, I'll show you the outcome. People don't, generally speaking, save cash, and businesses don't, generally speaking, save cash. They look for something to spend it on that they're going to get a higher return. And it kind of incentivizes businesses to take on debt and incentivizes people to take on debt to invest that money into something that's going to outpace the inflation and the increase of the money supply. So the incentives are wrong. And the reason I'm doing this publicly, I could have carried on doing this privately. Yeah. And I would recommend businesses just study it and think about it, because you can buy a tiny little bit of Bitcoin every week or every day as a protection, or 1% of your cash, your surplus cash could go into it while you're studying the asset. But at least it gives you hope for the future that the money you're buying today is going to be worth more in the future than it is today. And part of the reason I've done this publicly and said, right, we'll stand out there and we will do this, is because I genuinely care about the economic environment that we're in the UK, because the money getting devalued year on year on year is creating an environment where recruitment consultants coming in now in the same situation I was in 2012 are coming in to an environment where they can still perform, earn high bonuses, earn money, but the price of the houses is outstripping people's performance.
Yeah.
So it's getting further and further away. Those sort of like, right, I want to have a family. Well, the cost of having a family is increasing and increasing, and you're watching basically asset prices go like that and wages go like that. And that's been the case since 1971. So this is about far more than this business's success. And people who understand the asset class deeply in Bitcoin are pretty passionate about it, which is why I said it's not crypto before, in that you've got pounds and dollars which can be printed by government central banks and private banks, increase the money supply to the detriment of those holding the currency. You've got crypto, which can, if I separate them, crypto, like, people can make one up in the bedroom and print as much as they want. And then you've got,
could, right? You could do that. Look,
got
you're a
Bitcoin.
business. You're a business that's got, you know, a reputable brand behind it. You've IPO'd. You've got a you know, an investment. You've got enough of a story there to go, do you know what? We're going to do our own cryptocurrency, and that's what we're going to get people to invest in, and that kind of thing. You could do that, right? But
by doing that, it's absolutely the antithesis of everything I stand for when it comes to sound money. Because
you seem more
when
of
I'm separating,
a purist.
Yeah, when I'm separating Bitcoin and crypto, they couldn't be any different. Crypto can be printed by anyone, but Bitcoin is an asset with no issuer. Nobody set it up. Nobody controls it. There's no dollar around the world that have every single transaction that's ever happened embedded on them. It's a ledger of truth, but you're getting quite into the ethos and the detail of Bitcoin with that. But what I would say is we've discovered digital gold.
Yeah.
And there's a lot of people trying to sell people digital tinfoil because it can, it's got a use case and keep chicken warm. And you're like, when you look back in history, like, the distraction from Bitcoin is probably the thing that holds back people really understanding that this is not a get rich quick scheme. This is a don't get poor slowly scheme.
I like that.
So with Bitcoin on the balance sheet, all you're looking to do is save money that you want to keep for 4 to 8 to 12 years and let it compound and increase in value of that period of time. So I'd recommend other businesses just studying the asset and at least getting to the opportunity where they can buy a little bit if they'd like to, and they know how to do it. Because when all businesses start doing it, which I'd imagine is in the next 4 to 8 years, when it becomes a more common, what's your balance sheet look like? We hold the intangible asset Bitcoin on our balance sheet, and this is a proportion that we're putting it. Naturally, it becomes a lot harder to build a balance sheet in that asset when it's finite and everybody's looking to acquire a little bit. But as a PLC, we see it as, I suppose, a strategic asset to drive operational growth, which is more difficult to do as a private company. But as a private company, business owners who are considering doing that can then look at employee ownership trusts and all these other different options backed by an asset that they can use as collateral and borrow against, that they can leverage and that they can put into evaluation. And as a public entity, we can also put that into evaluation, where we're saying if we want to acquire that business and they look strategically aligned with us, we want to join the group. If we've got £1 million cash on the balance sheet, let's switch that into our chosen asset of Bitcoin for the long-term reserve, and then let's carry on running the business profitably. If they're already holding Bitcoin, we can value the Bitcoin at a 1.5 times the valuation, just based on, that's what we're trading at the moment at a 2 times the value of the Bitcoin that we hold. Obviously, there's the operating business within there, but it's a strategy that we're using to drive operational growth. So by being public, we've got a board that's got VJ Selvin, ex-Goldman Sachs head of governance. We've got Richard Byworth as a board advisor who's running a Swiss hedge fund focused on Bitcoin. We've got a chairman from the first ever pension fund. He advised the first ever pension fund in the UK to allocate to Bitcoin with a small sort of 3 to 5% allocation, I think, at the time. And then we've got a CFO who's done main market listings. So we've, by joining this group as a consultant or by joining this group as a business, our plans into the future are that Bitcoin Treasury side of the business. When we're trading at a high multiple of the net asset values that we hold, we will raise capital by issuing equity. And the model there is, if our business is worth this and the assets we hold is this, we'll raise equity, buy more Bitcoin, and increase the level of the Bitcoin that we hold, and just increase the flow. And if we're trading at a low multiple of a NAV, we've launched convertible bonds. We did first one New Year's Eve. 10 Bitcoin comes in from the bond buyers. We sell them at a premium to our share value, so that shareholders know when our shares outperform Bitcoin, they convert and come onto our balance sheet. So the balance sheet strategy is to build a pristine balance sheet with zero debt and as much Bitcoin as we possibly can to benefit into the future from that. And the operating strategy is to use the strength of the balance sheet and the benefits of the balance sheet and the public status to be able to issue performance-based share options that really sort of solve that long-term issue I've spoken about, where young people coming into the industry or anybody in the industry, life's outpacing you. Is to say, well, your performance-linked share options are now tied to operational growth. They're now tied to the expertise in XCE Connecting Excellence, ability to increase the Bitcoin per share that we measure. And you're going to have the exposure to the compound annual growth rate, basically the price going up in Bitcoin over the next 5, 10, 15, 20 years. So if you want to stick with a company and build a long-term equity incentive plan that actually has the opportunity to propel your life at the point where you come into retirement, rather than you saying, the wages have still not kept up with the asset prices, I'm still waiting to buy that first home. And we're trying to give that kind of long-term opportunity to people joining the group, and that includes businesses that are looking for, well, I might not want to exit next year or in 5 years. I want to build this business, but at the point I do want to retire, I want to have locked in value. And we're allowing you to lock into a public business that's got a plan to go onto the main markets, that's got a plan to be listed in the US, that's got investors who are
you've got a very sort of clear roadmap ahead of you guys, haven't you? Which I want to come on to that in a minute, but before we do, what's your background, Scott? You mentioned obviously you graduated from uni, went into recruitment. What's your background? What are your mum and dad in finance? Are they clued into this sort of stuff? Are you, like, do you know what I mean? Like, because I think for a lot of people, you talk about things in such an clearly constructed manner that is sort of like, is this even for me? Like, do you know what I mean? Am I the type of person that can get involved in this sort of stuff? Do you know what I'm saying? Like,
from what perspective? You mean when you say?
What's your back? Like, listen, I was very.
Oh no, I can go through my background. I've spent the last 8, but no, you'll be surprised. I've spent the last 8 years speaking to family and friends about this topic before I've publicly had a strategy where I've said, "Hey, this is what I've been doing for 4 years." That's all they've heard about, and I think you'll learn a lot through that period. In that, the first time somebody has a conversation about this asset, they are skeptical, and they're like, "Oh, that's not for me." And I think they have like this image that everybody who's buying Bitcoin every day and every week and saying, "I'm going to hold it forever," is some kind of cryptographic internet nerd, and not somebody who's just looking to find the solution for the world's biggest problem, which is storing value over the long term. Like, how much energy goes into picking your investments over the next 10 years and then find out that you picked the wrong investment, or buying the right property and then finding out that the tenant isn't paying. All this stuff that people do. The main use case of Bitcoin is just a long-term savings account for people. But I've spoke to family and friends about it quite often. And it's rare that people take the step where they actually say, okay, I'll just download Strike, set it up, and buy £1 worth or £5 worth and just see how it works and just get familiar with it. Rare they take that next step. And I think I'm passionate about educating on it. But from a background perspective, my dad is a nuclear engineer in the Northwest. So I grew up in the Northwest in kind of the working class mining towns of rugby league country in the Northwest. My dad had an apprenticeship at a nuclear engineering firm, and he's still with the same firm today. So
Brilliant.
like that kind of like loves
Lifer, yeah.
yeah, office is 20 minutes from home, and there's early finish on Friday. Like, got a really good lifestyle with his work, which is obviously more complex than we're in recruitment. If we're asked to design something that was safe at Sellafield nuclear waste plant, we'd probably be a little bit out of the depth. So he's quite a technical engineer. Yeah, and my mum owned a local hairdressers. So I had a mum who was quite a small business entrepreneur.
Yeah.
Working 24/7, and then dad who was career probably he probably values lifestyle over like how far can you push with the career. I think I remember him saying to me, like, I can be home at 3:00. It's 20 minutes from the office. He gets to coach the local rugby league teams. He gets to enjoy the gym. He gets to enjoy good perks and a really secure career. So
and
that's
time with his kids.
Background.
Right. And time with his kids.
Yeah, exactly.
Which again, for that generation was incredibly rare, right? So
yeah, and that's what's the family and friends will tell you, I bring every problem back to the source, which is the money. The quality of money in society means people are spending less time with the kids.
Yes.
Because two good roles now, you sit in front of young people and they're like, that's not going to get them on the property ladder and not going to get them the time with the children and building a family.
Forget property ladder. Look, I've got I've got businesses I work with, right, who have got young members of staff who use their commission checks just to top up and pay off their credit cards from that quarter. So they literally will be spending on credit cards and credit cards and credit cards on just everyday, not even luxury spend, just everyday spend, and then rely on that commission check just to keep them at zero, just to clear those bills and clear that like credit card at the end of the month. You know what I mean? Like that's a far cry from when we used to be like, oh, wicked, yeah, I've got this, and I can put this much on my credit card, and I can put this much in my holiday fund, and oh yeah, that can go in the Rolex fund, you know, or the whatever like nicety you want to treat yourself with. Like we would be working out our commissions straight away, right, and then going, okay, yeah, cool, I'm going to do this with it. I'm going to do that.
What am I going to buy?
Yeah, exactly. Yeah,
you weren't buying it because the money was going to be worth less a year after. You're buying it to enjoy it.
That's it. That's it.
And now it's just, that is the biggest issue in society. Like you solve the inflation, you solve the problem with the money, and the money is the problem.
Yeah.
That's why gambling is so popular, because the £500 you've got this month is definitely not going to buy the same as it does today in a year's time. But it's not quite enough to buy an asset. No. You can't buy a property with it. You're too far away from investing in stocks and shares with it. So the person who's got it goes and gambles it on the hope that they might get £5,000, which then they could invest. So that's where you go back to sound money. Like, a sound money breeds a sound society. And life was a lot better between 1944 and 1971 from how much time were people spending with the children.
Yeah.
How many people had to go to work from the household in order to buy a nice house and buy 2 cars and go on nice holidays? And when 1971 happened, and there was just the ability for governments to print as much money as they need to, without it being obvious. Like you say 2% inflation. I mean, I don't want to laugh about 2% inflation, but the money supply realistically grows at about 8% per annum. That's what the S&P 500 goes up at. So you're not getting any richer. No. You're the exact same if you're investing in the S&P 500. And solving that issue where things become cheaper over the long term for you, or things come down in price over the long term, allows people to then save for the long term, knowing and confident that the life's going to be better in the future than it is today. If you look at house prices over the last 10 years, it used to cost 500 Bitcoin to buy a house, then it cost 250 Bitcoin to buy a house, then it cost 100 Bitcoin, then it cost 50, and now you'd probably say, like, you're going to get a really nice house for 5 to 10 Bitcoin. And in 5 and 10 years' time, it'll be you'll get a nice house for 1 Bitcoin, and then it'll be 0.5. And that might sound like I'm just saying Bitcoin's great, but what I'm saying is it's a sound money that's finite, and you can keep it, and you can transfer it, and you can use it. And if people are doing that, forget whether it's Bitcoin or if they're just holding gold, which is hard to buy with £500. But if they're holding gold or anything else, that means that they're measuring stuff and it's getting closer to them every year. It just breeds better behaviours in society and incentives.
Of course, yeah, because you feel closer to your goal, right? You feel closer to the end result. So what's the roadmap looking like for you guys then? Because obviously you want to hear from cash-rich recruitment businesses that want to do something different, but actually for the long term. You want to hear from business owners that are eyeing up an exit strategy, but want to do something a bit more creative, but actually kind of understand the ideology behind what you're building here. And you want to hear from consultants that actually want some skin in the game, some proper skin in the game, rather than a performance-based kind of incentives. What's on the roadmap for you guys as a business? You mentioned trying to. You're going to raise again. Are you trying to get into kind of? I'm trying to think what the word was. You mentioned that you kind of go public like a little bit further or something. What was that? Yeah,
so we want to make we want the shares accessible to wider investor bases.
Right.
So we're always looking at that. So I don't know when this is going to be aired, but we would like to be accessible to the largest country and demographic of investors who are interested in this space soon, and hopefully we will be, without me being specific, as I am kind of restricted a little bit in what I can say about stuff that may not happen in the future. But we're always working on that. And then when it comes to raising equity, when we're in an environment where MNAV is high and sentiment is high. It isn't high today, but that's the point of our operating businesses. The operating business has had a January where we've outperformed. We've bought some more Bitcoin in January from operating cash flows. But when sentiment is high in Bitcoin, you tend to see capital that's trapped going into businesses like this. So you've got £1.2 trillion worth of savings in ISAs and SIPs in the UK. And when they decide they want access to an operating business that's backed by a sound asset, that's the sort of demographic that you might see buying the shares here and also overseas. And then you have institutions who are mandated not to buy the asset, but they are mandated to buy equities.
Right.
And some of those, each level, you trigger new institutions. So on the Bitcoin balance sheet and Bitcoin Treasury side of the business, we'll raise capital accretively for shareholders. So when we raise it, the intent is to increase their Bitcoin per share measure. And we'll issue convertible bonds at a premium, which also helps increase the Bitcoin per share measure. So we want to build a balance sheet with the kind of objectives that you look at. You want to get to 500 Bitcoin, then 1,000 Bitcoin, and you want to get there as soon as possible.
Yeah.
Long-term sort of outlook on that is at some point, with the growth Bitcoin's having, when that hits £1 million per Bitcoin in whatever year in the future, then if you've got 1,000 Bitcoin on the balance sheet, you're at £1 billion balance sheet size with no debt. And on the operating side of the business, we have plans to attract as much high revenue generating talent as we can.
Yeah.
And we've got a scalable platform there, backed with the public status and the access to capital markets. It means that we can leverage that. And we are sector agnostic and regional agnostic in that 70% of our revenues overseas, probably quite similar to a lot of executive recruitment firms. But we are in that sort of plug and play 360 degree with the support of market development and everything else where necessary. But when it comes to that, we want to deliver revenue growth that allows us to increase the Bitcoin on the balance sheet by 25% as a conservative line. And then from a company's coming into the business point of view, we'd like to make sure that they are in line with our size and market cap at the stage that they're coming on board. So, you know, if one of the Shrek firms asked to join, it would be a no at this stage in the process. But businesses that are privately owned, that are strategically aligned, we'd like to bring them into the group, provided we understand the long-term thesis, and we're happy to speak about that. And then we have some other plans as well with some of the hires I'm speaking to, where there's other ways in which we can develop internationally. But I'll have to share those details when we get to them.
Love that. Love that. Any closing thoughts? Anything you want to leave us with? Any words of wisdom or inspiration that you live your life by?
Study Bitcoin. Yeah, study Bitcoin. Get off zero knowledge on it, and work out how to. Because the message, that sounds flippant, but the reality is we're in a country that's business owners are working so hard.
Yeah.
And especially in this industry, people they come into this industry because it's self-sovereign. You earn however good you are in this industry, which is why I love the industry and I love the characters who are in it. So the success that they're having in spite of inflation caused by governments and central banks, and in spite of poor policy decision making at the top, and in spite of this drive to make sure that they're charging businesses every time they look left or look right or look up or look down, if you can study the asset class and understand where I'm coming from on the sound money, and we're in the birth of an asset class here that's 15 years into it. Gold's been around for 3,000. If you zoom out into the future as you're studying it, then this really is something that gives the private businesses, not just the PLCs in the UK, an opportunity to get a conversation at the table when the time comes in 5 to 10 years and say, this is what we're not happy about. We're storing our money in a different currency at the moment.
Yeah.
So unless you want to listen, the investment's not going to go into a country there. So it gives, by removing the power to inflate the currency, we gain some power as well. And I think it's an interesting topic to study.
I love that, mate. I love that. And I think what's really kind of important there in what you said is that there's probably a sentiment amongst kind of people who have maybe not looked into Bitcoin or have heard about it but haven't really took it seriously, is that the train's passed and it's too late to get involved. But actually what you said there really makes a lot of sense. That, well, what's the alternative? The alternative is the gold standard, and gold's been around for 3,000 years. So the 15 years that you haven't been involved in Bitcoin to this day is probably, it's a grain of sand on a beach. Like, let's not.
When you look back in 200 years at this 15-year period, the price is just going to look like that.
Yeah.
It's gonna like, how did they not spot that happening? Yeah. And when you look at it, here's a tip then. Have a look at the Bitcoin price over the last 15 years on a logarithmic scale, where it's like 0 to £1, £1 to £10, £10 to 100, 100 to 1,000, 1,000 to 100,000. It just goes up like that. And what it looks like and it feels like to people is that it goes like this.
Yeah.
But if you look over a 4-year average, it just tends to trend up. And that's the point, really. It's not a short-term thing. Do not kind of think
don't be chucking. Don't chuck money into it thinking you can get it back out 6 months. Yeah,
it's a long-term savings account, which is why you need the studying, you need the conviction, and you need the experience over 4 years to understand how you react to it emotionally. I recommend businesses study it, but I recommend they progress and allocate in line with their own conviction. Like, don't borrow mine, build your own when it comes to conviction, because can feel tough if you've bought an asset and it's going down in price unless you understand it and you've got a long-term plan. Yeah. But Fidelity, BlackRock, Standard Chartered, BlackRock have just released an ETF a couple of years ago now, and it's been their best performing ETF in the history of ETFs. They were the guys who made the first gold ETF, 2005. Have a look at what gold did after 2005 when BlackRock put that ETF in place for their clients. They've only recently done one for Bitcoin, and it's been their most successful ETF. So I think over the next 5-10 years, you're gonna just see, you're gonna live through a a kind of shift towards it becoming an institutional asset that's embraced by institutions and is now being embraced by the US government, regardless of what side of whether you like or don't like them. That's happening. So studying it, I think, is quite important because it's an opportunity for people and small businesses to benefit from everything everybody else does on their behalf.
You guys certainly did, right? That's the key, right?
Yeah, we did.
Bro, I love that. Honestly, thank you so much for talking so candidly about it and being so open about sort of your mindset and your decisions and that kind of thing. Anybody who's watching and listening who wants to get in touch with Scott, hear more about kind of the different things that they've got going on and get involved, description will have links to their LinkedIn, their website, and everything else that you need. I want to thank you for watching, liking, sharing, subscribing, doing all the cool shit that you guys do that allow me to do this cool shit for a job. New episodes drop every Wednesday and every Friday. We'll see you again next time. Ciao. My first recommendation for you is Asen. Asen are a modern employer record built specifically for contractor recruitment businesses. Asen helps teams scale fast and stay compliant across the US, Canada, and globally with an all-in-one white label EOR platform. From onboarding and payroll to workers' comp and benefits, Asen handles the entire back office so you can focus on your clients and the talent. To learn more about them, check the link in the description below. My next recommendation is Think in Circles. Job ads are not marketing. AI won't save a bad strategy. Most recruitment agencies and RecTech businesses are failing because they lack activity. They're failing because their marketing's got no clarity, no positioning, and no consistency. That's where Think in Circles comes in. They were built specifically to solve that problem. They understand the recruitment market inside and out, how agencies actually win clients, how candidates make their decisions, and how RecTech businesses actually scale. So for recruitment agencies, Think in Circles are your fractional marketing team, fixing positioning, sharpening your messaging, and driving consistent execution, but without the cost of a full in-house team. For RecTech suppliers, they solve the hardest growth challenges: go-to-market strategy, demand generation, and land and expand growth in the UK and beyond. So no generic B2B fluff, no random tactics, just recruitment-focused marketing that helps you understand your problem and then provides you a solution on how to fix it. Find them at thinkincircles.com, link in the description below. The recruitment market moves fast. Growth targets are changing, costs are rising, and hiring locally isn't getting any cheaper. In 2025, 30 recruitment agencies stopped overpaying for talent and started scaling smarter using Infinity Staff Global. By outsourcing key roles to South Africa, agencies embedded fully trained recruiters, resources, BD professionals directly into their teams, working UK hours, using your CRM, and delivering real results. You reduce payroll costs, you cut HR and admin burden, you gain access to a deep pool of experienced recruitment personnel and talent, all at a fraction of UK costs. Scale up when demand rises and stay lean when it doesn't. If you're ready to grow without the pressure, discover how at infinitystaffglobal.com, link in the description. I never understood why recruitment businesses that are growing choose to hire a single marketing person who can't do it all, instead of using an outsourced team that can. Also, by contrast, I never really understood why businesses that have got an in-house marketer keep adding headcount rather than strategically outsourcing specialist skills that they need in the team. That's where the marketing junction comes in. They give businesses access to the right marketing expertise at the right time without the overheads of a growing internal team. They specialize in recruitment marketing, which means that they understand how you need to generate new leads, tap into niche and that hard-to-reach talent pool, and build marketing strategies that support both clients and candidates. The result? A lower marketing spend, smarter execution, and a significantly higher return on investment. And if you want proof, the Marketing Junction's hiring savings calculator lets you see for yourself exactly how much you could save by outsourcing strategically instead of hiring again. Link in the description. Are you still wrestling with spreadsheets to calculate your team's commissions every month? Then this next recommendation is for you. Let's be honest, month end can be a total dread for finance teams and a source of sort of guesswork for consultants, right? That's where I highly recommend Conquest. They're a global leader in commission software built specifically for the staffing and recruitment industry. Instead of manual data exports, Conquest plugs directly into your existing CRM or pay and bill system, like Bullhorn, Vincere, JobAdder, you know the lot. And it automates everything from splits down to currency conversions to complex team overrides and clawbacks. But it isn't just about the back office. Conquest brings your commission plans to life with real-time visual dashboards. Consultants get visibility into their earnings pipeline, which doesn't just reduce their inquiries and queries, but actually supercharges and motivates the team too. When your team can see exactly what they're earning at the moment the deal is tracked in the CRM, productivity goes through the roof. The result? 0 error rates, cleaner CRM data, and a massive reduction in the admin burden that comes with calculating these commissions. So say goodbye to spreadsheet headache and get your commission strategy into the 21st century. You can even start with the free health check tool. See how your current setup scores. Details are in the description below.